Good afternoon, good evening, good morning. Depends on where you are coming to Top Gun Options from around the globe. Literally, welcome aboard our how to hedge the Trump rally here, folks. Let me go ahead and make sure we're airborne here. Can anybody see me? Give me a thumbs up if you can hear me, see me, and all that good stuff. You bet I am always on time, man. It's called discipline. Discipline, risk management, and superior execution. That's what we're going to be talking about today. Tamara, hi Wiz. I closed out a 3-day trade on Alibaba today with a double vertical for a nearly 2,000% ROI. I didn't think I'd start the webinar like that, but Tamara, you earn a quick screenshot if you don't mind. Thank you. Wow, I usually don't start webinars like this, but I'm going to Tamara, 2,000%. Awesome. Can everybody see that? Oh, let me. Everybody read that real quick. How many of you are new to Top Gun Options? That's a great way to start our webinar. We're going to talk about double verticals today, Tamara, and I taught Tamara how to trade. Folks, Tamara's been a TGO member or trading since February. This is awesome. Look at that. That is awesome. So Tamara, well done. Very, very glad you do that. 2,000% return, guys. That puts a smile on my face. And Tamara's going to be joining us out in Lake Tahoe for our next live event. All right, guys, let me get back on track. So that was awesome. Yep, everybody, virtual golf clap for Tamara. It's, hey, and Tamara would tell you in person, if you join us in Lake Tahoe in November for our 2-day event, you'll meet her in person, see that she's a real person, a great person there. It ain't rocket surgery, folks, especially options. I think when a bunch of rich white dudes came up with options in the early 80s, they intentionally kept it in the back room with a bunch of cigar smoke to make it seem like it's confusing or it's tough. They did that on purpose, folks. This isn't, if I can do it, if Tamara can do it, you can do it. So welcome aboard Top Gun Options, folks. Quick warning, if you don't like politics, especially if you don't like the current politics, I'm giving you a heads up to leave right now. Politics is driving this market. Why'd the market go down today? Donald Trump said last night at a political rally that there might be a government shutdown. Market went down today. So I'm telling you right now, if you're asking me already, where's the trades, or I hate politics, or I hate your politics, do me a favor and leave. Mainly because I don't want you to member as a member. I actually get rid of members. So it cracks me up. Fuzzy, up over 12 grand in Wiz style long call diagonals on Amazon, Brazil, JP Morgan, and Google. Great year. All right. I love, and it's funny because I just sent out a random email to my members. I'm like, hey guys, I'm doing a hedging webinar for potential new members if you want to come, and here they all come. So I'm grabbing that one too. Fuzzy, that's a good call sign, man. My call sign's Wiz, so save as 12 grand, 12K. Awesome. Well, hopefully we're gonna keep that going here, guys. But let me, if you're a member, do me a favor and keep on, hang on to those. Let's get going because we got to talk about hedging. I think in the past couple months we've gotten like 3,000 new leads here at TGO just because the word is getting out how good we're trading. The word is getting out that I was one of the only financial professionals to both predict a Trump victory and a market rally of at least 10%. So it's going to be interesting to see what I have to say about what this rally is going to do right now. But check out, I've done 2 or 3 of these webinars, free webinars in August, where I covered VXX bullish and bearish double verticals. How many of you in here have attended those previous webinars? Which one? Okay, so check this out, folks. If you did the bullish and bearish double verticals and managed them correctly, you are looking at nearly $10,000 in profit. For example, take a look at this one. Does everybody remember this one? This was what? Does everybody remember this double vertical? And it was on VXX out to September 1st, right? A potential $11,000, we'll just call it $10,500 gain with a potential max loss of $4,500. How many of you were in this one, folks? This absolutely incredible. And I'm going to show you exactly, because men lie, numbers don't. Let me show you when we put on the, right here. That was a Thursday, folks. I did a Thursday webinar, and what did I put on a bearish double vertical for? My exact words, you know what? I don't have to give you my exact words. Let me show you the replay. If you didn't get a chance to attend the last one, which was a bearish double vertical, and this one was a bullish double vertical, why don't you guys can watch the replay. So let me paste this in here. Here's the replay, because I'm not going to spend too much time going over what I covered in those webinars, but suffice it to say, so there's the link. I want you to, after you watch this one, if you have time, watch these other ones, because this is exactly where we put on a bullish double vertical on volatility. Watch the replay. I said, I don't know what's going to happen, guys, but something's going to happen in the next couple weeks to freak the market the hell out. How did I know that? My call sign's Wiz, not Nostradamus, right? Guess what? Look at first of all, look to the left. There's a Jim Comey, I'm a felon and a coward implosion. There's the Republicans are idiots and can't repeal Obamacare under a Republican president. Here's the Donald Trump Jr. emails. Here is, holy crap, Trump's a racist, and here is North Korea's going to kill us all, right? Or I'm sorry, I have those backwards. Folks, we put on bullish double verticals, and then as the Fred Sanford came right here, as Fred Sanford, you know, anybody watch Good Times, right? Right here, we put on a bearish double vertical, okay? So we have been trading volatility successfully here at TGO, and that's what I want to do today. We're not going to necessarily talk about, I'm going to talk about the SPX and VIX today, okay? My name is Matthew Buckley, folks, for all of you who don't know me and this is your first webinar, or if you've only attended a couple of those free ones. If you attended my 2 free webinars in August and you looked at those double verticals, folks, you know who I am now because they worked. They printed money and worked like a champ. And we're going to talk about 2 potential new trades today. And welcome aboard to all the new members who joined as a result of those trades. Call sign Wiz, flew the Hornet for 15 years for the Navy, graduated from the Navy Fighter Weapons School, which many of you know is Top Gun, and also flew 44 combat sorties over Iraq. I got to give me a 30-second rant on the USS John McCain, the USS Fitzgerald, the Lake Champlain, and the Antietam. 4 ships, 4 months, 1 ran aground, and 3 bumped into other ships. You know why? 8 years of Obama, sequestration and budget cuts, a shitty-sized Navy that's been overextended and spends 8 hours a day, sometimes on transgender training, instead of seamanship, navigation, and warfighting. That's your answer. I've been all over the message boards, the Wall Street Journal, talked to the Wall Street Journal. Oh my God, why are these things happening? What are you people, all stupid? I was in the Navy still when they started to do all this. I remember sitting in 4 hours of training, red light, green light, yellow light training with a really bad infomercial, you know, a group of actors in an infomercial. Oh, that's a yellow compliment. I'm like, what does this have to do with turning the enemy into hair, teeth, and eyeballs? That is why ships are going bump in the night, folks, is because they don't do navigation, seamanship, or war fighting anymore. Don't get me started. It's making me furious. That is why last month, Secretary of Defense Mattis did what? Secretary of Defense Mattis said, that's it. We're done. All non-essential training is canceled. But it's too late. The commanding officers of these vessels 8 years ago when Obama became president were young lieutenants. They were raised under the Obama administration of, you know what, I know we have 50,000 homeless vets, but we're going to pay for transgender surgeries instead of housing our veterans. Don't get me started, man. It makes me furious. That's why things are going bump in the night, okay? How did I go from the cockpit to the trading pit? Always loved trading options. I applied everything I was learned flying a fighter aircraft. Discipline, implementing a strategy, having tactics, contingency planning, knowing when to get out of a bad situation before it gets worse, knowing when to get out of a good situation before it gets worse, okay? And I applied all of that to my trading, and it got incredibly better, okay? Chris, well, thank you for your service. This is badass. You're absolutely welcome. Everything I did flying fighter aircraft, I applied to my portfolios, and eventually I popped up on one of the radars of the largest volatility arbitrage firm in the world, equity options Vollard firm, headquartered right there in the Chicago Board of Trade. It was called Peak 6 Investments. Great group of people, great group of guys, and just had an absolute blast. So little old me, retail trader, doing what you're doing, trading out Amazon bull put spreads, long call diagonals on JP Morgan, went to essentially help run one of the largest volatility arbitrage firms in the world. We started a hedge fund. I helped build a brokerage firm called Options House. And oh, guess what else I did when I was up there? I was the founder and CEO of the Options News Network, ONN.TV. Many of you remember that. We were essentially the CNBC for options. I was the CEO. I was the founder. I also hosted a couple of the shows, giving retail traders such as yourself a behind-the-scenes look at what was going on in the options community. Now, no offense to any of my friends from the Great White North. If you can't see behind me, that's the beach. That's Fort Lauderdale. Can't stand Chicago weather, guys. And I felt like I was a Valentine in trading places. You know, two rich white people betting $1 on me. So I picked up the clan and moved down here to South Florida, where I'm the my most important job is a commanding officer of a fine group of folks right there, man. Love them to death. So that's what we're doing. That's my background. That's who I am. Now let's talk about Top Gun options and potentially hedging the Trump rally and where we're going from here. Real quick review of our methodology. It ain't rocket surgery. It's called SOT. Many of you in this webinar are very, very average retail traders. Maybe not just performance-wise, but in thinking, meaning you get up, you put on your bunny slippers, you take a drag of coffee, you put on CNBC, which I call Comedy Central. If you're getting investment advice from a guy who uses a cowbell and an air horn, you deserve everything bad that's going to happen to you. No offense. But anyway, folks, you're very tactical. Hey, I thought the market was going up. Why are we down 8 points on the SPUs? Did you not watch the president's speech last night where he said, give me a wall or I'm shutting down the government? Your head is not above the trenches. You're not looking at what's going on in China, in Russia with oil, North Korea. How many of you a couple weeks ago expected us to be near a nuclear war with North Korea? I did. One of my good friends is the commander-in-chief of the Pacific Forces, four-star admiral, Admiral Swift. Call sign not so, but today I don't think I call him not so. I'd call him Admiral, folks. I know a lot of people get a lot of intel, whether it's on Wall Street or the military. So here's what we do here at TGO. We go the other way, folks. I'm going to give you a quick strategic brief today about what's going on around the world. China, Russia, oil, Iran, North Korea, Mario Draghi, what did he have to say in Jackson Hole about quantitative easing? And then we're going to get operational. What's Janet going to say on Friday? How are earnings looking? How are new home sales imploding? All sorts of operational domestic issues. And then and only then can we get tactical and trade. See this, folks? I completely changed the way that you're going to look at trading. At TGO, and you read that Tamara's post and a couple other folks, I've literally changed the way that they trade and they view the market. Many of you wake up, look at a report on Tesla on CNBC and say, hey, maybe I'll get long Tesla, and then you're broke in a week. You deserve it, folks. You can't trade like this anymore, and I'm going to teach you. Why? Trading is a form of combat. Somebody's going to win and somebody's going to lose, and you can be damn sure I don't plan on being on the wrong side of that trade. That was never me, and I don't plan it to be me anytime soon. Here's what I want to do. I want to jump right in. I hate slides. I'm not a death by PowerPoint guy. We need to get in the markets here. Let me give you a quick strategic brief. The market went down today. Why? Politics. You hate politics, you're most likely broke. If I didn't trade my politics or what I believed, I'd be broke. I'll say it again. Here's my spirit animal. Where is he? Jeffrey Gunlock. Jeffrey Gunlock, me, I forget, I need to write down the other like 2 or 3 guys. About 5 of us, and I will put myself in this group, 5 of us not only predicted that Trump would win, but the market would rally at least 10 to 15%. Yours truly, right here, nailed it. How did I know that? Folks, I also do motivational speaking. I wrote a book called From Sea Level, where is it? From Sea Level to Sea Level. You can get a copy of that, blah, blah. I travel, here's me speaking to McKesson. That's the CEO of McKesson, highest paid CEO of the world. He made $150 million last year. I think I made a little less than that. I spoke to 1,500 people of his salespeople. Folks, throughout the fall, I was meeting mom and pop owners of convenience stores, salespeople at McKesson. at the cocktail party after these events or, later that night, people would whisper to me, like they look to their left and look to the right and go, I'm voting for Trump. I'm like, they're looking around like they're going to get hit in the head with a shovel. I knew the polls were lying. I knew the jackasses like Lloyd Blankfein or Jamie Dimon at Goldman Sachs and Citi and JP Morgan putting out all these reports. Hillary's going to win. She's running away with it. And if, God forbid, Trump wins, the market's going to implode. I knew it was lies. I knew the polls were lying. I knew the media was lying. And I knew all the financial firms were lying to you folks. There were TGO members, Mike, Diane. Mike made over $150,000 on one Goldman Sachs trade, folks. I told everybody as my TGO members to load the boat with the financial stocks before the election. Absolutely incredible. Had a blast. So, Steve, what trades did you put on to take advantage of your Trump call? I just told you. The financials, we got long Goldman Sachs, we got long JP Morgan. Once you become a member, guys, you can go back and watch all of my member episodes, or even watch my sit reps, my situation reports, the days, the weeks leading up to the election. We were putting on long call diagonals, bull put spreads. We were bullish as hell in front of the election. Also, Steve, the trades that we put on in front of the election were VXX trades, volatility trades. We traded the Brexit. I actually got the Brexit wrong, folks. It was a coin flip to me. I'm like, I should have known when Barack Obama went over and poked him in the chest and said, hey, you better vote to stay, or, I don't have time to work out a trade deal with you. How rude. Brits don't take well to people showing up in Britain, poking them in the chest and telling them to do something. I got the Brexit wrong, but we made $22,000 on 2 VXX trades. 2 trades just on uncertainty. Going into the Brexit vote, volatility went up, and before the last vote was counted, I said, that's it, close that one, get bearish, and do a bearish double vertical. So, Steve, long the financials, and we traded volatility. Very good question, and those were the trades that we did. Okay, so right now, it's politics, guys. The market went down today because he threatened to shut the government down if he didn't get a border wall. That was meat, that was off the script, and he doesn't believe it. Mitch McConnell a week ago, and obviously the New York Times is reporting that the president and Mitch McConnell haven't spoken in weeks. Mitch McConnell came out with a press release a couple hours ago when I was working out in the gym that said, the president and I are in regular communication, we're on the same team, quack, quack, quack. Mitch McConnell said last week there is 0% probability that they're going to shut the government down. What did Speaker Ryan say today a couple hours ago? He said the same thing. We don't need to do that. They're not going to shut the government down. Okay, so think Trump's approval ratings are also in there. What Goldman Sachs trades did you, Steve? I can show you all this stuff. Steve, are you gonna troll the entire time, or are you gonna listen? So we got so Steve is here, but guys, it's not going to get shut down. This is a BTFD moment. Here's what I'm telling my members is going to happen here. We predicted. So last week it was what? Gary Cohn, he might leave the White House. Steve Mnuchin might leave. Everybody's leaving the president. That didn't happen, guys. All these coward CEOs last week left. The Merck CEO started it, right? Well, I personally am offended, and I'm leaving this council. Hey, Merck CEO, I don't give a shit what you personally feel. If I were a Merck shareholder, I would have been furious. You just gave up a seat at the table. Eventually, you're going to have to lobby the FDA, the House, the Senate, or whatever to get some things passed or some backdoor deals. You just did this to the president. And then, of course, after he did that, all the coward lemmings started following him off the cliff. I would have stayed at the table, and I would have stood up on my chair or on that table and said, this is why I think you're wrong, Mr. President. But this is America nowadays, folks. When something catches fire, when you're labeled a Nazi or a racist, it's over with. So that's what happened last week. The market didn't like that. But what happened? Steve Mnuchin, the Treasury Secretary, he didn't go anywhere. And what happened? Gary Cohn not only didn't go anywhere, he's most likely going to be the chief of the Federal Reserve. Okay? So, and you can write this one down too. The day that the president names Gary Cohn to be the Fed chief is the day the market goes up about 2 to 2.5%. You guys can write that down. So that's my prediction. Yes, he's going to be the Fed chief, and when the president does that, not if, but when the president does that, it's going to be a huge market rally here. So folks, What are we going to do? So there's the North Korea is going to kill all of us. And then I said that's not going to happen. The sanctions are going to get put in place. He's going to lean on China a little bit more. I said get bullish. We got bullish right here. And then what happened? Oh my God, Trump's a racist. He's a former KKK member. He and David Duke are brothers. And then the market imploded. I said what last week, guys? I said absolutely not. This is a BTFD. Buy the frigging dip. And again, we got long. But I also predicted what, guys? I said we are not going to, this 50-day moving average right here, this blue line, will become resistance. Watch my sit reps, folks. You see this right here? I said, it's on my desktop. This area right here, when the market in mid-April went below the 50-day and it became resistance, I said, cut this area right here and put that chart right here. That's exactly what's going to happen until we get a serious catalyst to drive us up or down. The next catalyst, guys, potentially to the downside is the October debt ceiling, the government shutdown. The other potential problem in October is a strike on North Korea. In my opinion, if we're going to do something, it's most likely going to be in October. The president got Russia. He got China on board. Folks, that was a huge victory. Do you know how many times China has voted no or abstained when it comes to North Korea? This is the first time in the history of us dealing with North Korea that China said yes to more sanctions. Why? Because they know Trump is not messing around. The guy told President Xi to his face, he said, if you don't handle this, if you don't sit on your nephew, we're going to kill him. And they believe that the guy is nuts. Not necessarily the North Korean leader, but Trump. So, folks, I think Trump's going to give him about 2 months, and it's going to happen. So we have got to talk about hedging out to October. My spirit animal, like we've talked about, Jeffrey Gundlach, said what? The same thing, although we said it before him. He's got some disaster puts out to October, and Jeffrey Gundlach is saying, hey, if I don't make 400% on my disaster puts, I would be disappointed. Holy crap. Harry, listen and learn from Wiz. Trades will come after that. What's up in the world? Thanks, Harry. I appreciate that. I don't agree. This is where Jeffrey and I, we nailed Trump. We nailed a bunch of stuff together. I don't agree with this. Everybody knows Steve Bannon last week. He more or less got, everybody read that interview he gave? There's no military solution in Korea. We're screwed. They have us. He did it on purpose. I think he did it on purpose to be a little bit of a Secret Service agent to Trump. Take a bunch of bullets, leave, go back to Breitbart, and try and help him out. I don't think October is going to be the massive one, but we have to be ready for it, okay? Here's another thing. Here's another canary in the coal mine. Not only are the transports rolling over, remember when FedEx, UPS, the port of Fort Lauderdale, the port of Miami, shipping, railroads, when those guys start rolling over, and when this starts happening, you get a little nervous. The number one buyer, listen close, folks. If you've been clubbing in the Bahamas mentally for the past 23 minutes, sit up and listen. The number one buyer of the S&P 500 for the past 2 years has been who? Rhetorical question. My members are already typing. The S&P 500. Let me say that again. It hasn't been China. It hadn't been the Fed. It hasn't been you, no offense. The number one buyer of the S&P 500 has been who? That's exactly right, Chris. The companies. Apple, look at Carl Icahn. Carl Icahn's still foaming at the mouth. Apple, buy back more shares. Could you imagine if Trump actually does get tax reform passed and allows Apple to bring home from County Cork, Ireland, $270 quadrillion? Could you imagine if they could buy back all their shares and the rest of the universe, right? This is starting to dry up, folks. Stock buybacks are starting to dry up. First of all, you run out of shares. Second of all, you run out of money. But what is driving this? Low interest rates. And what's going on? Janet Yellen is going to tell us on Friday what's going on because I lost my interest rate thing. Interest rates are low. Write this wizism down. When you become a member, you're going to have a lot of wizisms. When interest rates are low, stocks will grow. When interest rates are high, stocks will die. Now, one of the exceptions to that wizism are financial stocks. When interest rates start going up, now they can offer you this 10-year CD with the toaster, right? Hadn't been like that in years, guys. So that's another reason I think the financials are due for another leg up. Let me get this off my chest before we get tactical. I can't stand this guy anymore. Goldman Sachs used to be, I used to have Olympic financials. Goldman, gold medalist, they were the Death Star. JP Morgan was silver, and Morgan Stanley was my bronze. Done. After 2 crappy quarters in a row of earnings, Goldman Sachs has been booted out of the medalist position, out of gold, and they're not even, I'd say they're 6th now. And the other day, you know what Lloyd's doing instead of running his company? You know what Lloyd's doing instead of talking about traders and their $100 million bad trade? Goldman Sachs FICC, F-I-C-C, stands for Fixed Income, Currency, and Commodity Trading Divisions. They suck. JP Morgan and Morgan Stanley have been wiping the floor with Goldman's face. You know what Lloyd Blankfein's been doing lately? He's been trolling the president on Twitter with the eclipse the other day. I wish the moon wasn't the only thing casting a shadow across the country. Hey, Lloyd, why don't you spend less time on Twitter trolling the president and more time unfornicating your company? This is why ships go bump in the night, folks, is because you have an ass clown skipper like Lloyd Blankfein. I told my members 2 days ago, if you are still in Goldman Sachs positions, get out of them. I've had it. This is the type of CEO that does not know what's going on underneath them. This is like the Wells Fargo CEO when he said, oh, I didn't know 5,000 of my employees and, you know, are more or less committing felonies by making up accounts or stealing your data and making you a brand new account without your knowledge. I didn't know that was going on. That's because you're a shitty commanding officer. Why don't you go spend some time in the engine room and find that out? So guys, for my members who are on here, if you decide to just show up, get out of Goldman Sachs. Cash short, there you go. Lucas, it's the FIC, Fixed Income, Currency, and Commodities. They suck. And this guy is busy on Twitter trolling the president. No thanks, man. Sell Goldman Sachs. Okay, we're about to get tactical here, guys. So everything that I can point to on this chart right here, every one of these moves in the market has been political. We're about to see this age off the radar scope here. This was anybody remember this? This was the sell the State of the Union. This was Obamacare. This was the Comey memo. This was the Don Jr. memo. That's North Korea. That's all the CEOs and, oh my God, Trump's a racist. Every pullback and recovery this year has been political. There's no Ichi-Muchi, reverse Fibonacci, doji with a bear pennant twist. None of that stuff predicts or can do any of this. So this is what we do here at TGO. Folks, you don't need any trading software. Zero. The only software that's required is the 20 inches of gray matter between your ears and a brokerage platform. You need SOT, strategic. You need a strategic brief, operational, and tactical, okay? So here's what we have to talk about. The debt ceiling. I told you President Trump last night, he was throwing red meat to his supporters. I'd rather shut the government down than not have my border wall. Eesh. That type of rhetoric, folks, is going to scare the hell out of the market, isn't it? Mitch McConnell, 0% probability will shut the government down, even though under Barack Obama, the Republicans did what? And Paul Ryan. They never wanted to raise the debt ceiling when it was Obama. What did Obama say about Bush wanting to raise the debt ceiling? He called it treasonous or unpatriotic that Bush would raise the debt ceiling and give more of our credit card to the Chinese. It's so hypocritical. I can't stand both parties, folks. I'm a libertarian. Can't stand either party. Leave me alone. I'll put enough money in the till to have an army, a navy, and an interstate highway system. After that, go fend for yourself. So here's what we have to do, guys. I'm very bullish, okay? Bullish we have long call diagonals on Facebook, JP Morgan, the XLK. We talked about Apple today in our accelerated retirement program. I'm super bullish, man, even though it sounds like Eeyore. Folks, the first thing you have to do before you go on any mission in an F-18 or you put on any options trade is figure out how you're going to get killed. How am I going to lose the most amount of money in this trade? If you're not asking that as your first question before you squeeze the trigger on any real capital, you're a horrific trader. And I mean that. I mean that with the full weight of all of it, folks. It's you have to look at your threats, guys. What is going to kill me, and how do I mitigate that threat? To me, the biggest threat to all my long-term Jan 19, Jan 18 positions on my front months is a government shutdown, the nuke strike on North Korea. What else bad could happen? Bad earnings. I mean, there's a lot of stuff out there, but the closest alligator to the boat that could potentially bring this thing down is the government shutdown, the debt ceiling, and also the October strike on North Korea. So here's what I want to do. If you, here's what I need you to do. I don't have time to go into the bullish and bearish double verticals that we did on the couple other Thursdays. Please do me a favor and just watch the replays, and you'll get a flavor for what I'm talking about. This is extremely rare. What is extremely rare is about what I'm going to recommend that the average retail investor does to stay safe, is to go out. Let's hop in our time machine. I usually, I reserve the term disaster put for just that. When we trade our long call diagonals in our model portfolios, we put on disaster puts that help us reduce our margin, but also kind of act as a canary in the coal mine. I mean, most people, what's a bear market or a bear if a stock's in a bear market? It's usually defined as down 20%. But I gotta be honest with you, folks. Last week we were what? We were down about 2.5%, and it felt like what? I was getting emails and support and my Commanding Officers Club clients. It felt like 20%, didn't it? Guys like me said, I pull up my Lucky Strike and take a drag and go, no, this ain't it. This is not the Fred Sanford. So, and I told many of my members, I was in Chicago, what was it, a month, 2 months ago, the biggest concern on the floors in New York and Chicago is that they have 28, 29-year-old traders who have never seen a down market. Think of this. I know I was in the board of trade. I was in the board of trade when the VIX hit, what was it, 80, 90 in 2008. We've seen a down market, folks, unless you're my son Jack. Well, no, Jack saw a down market. He was too. Hey, Jack, he's watching up at his house in Boca. Most professionals managing portfolios, guys, in their upper 20s, they don't know panic. So this should scare the hell out of you. A lot of former partners and friends are like, Wiz, we're terrified. We can't stand in the boardroom enough and preach till we're blue in the face like the big one is going to come and you have to be ready for it. Now, I don't want to sound like the crazy guy on the exit ramp, on the I-95 exit ramp up here with the tinfoil hat saying the end is near. He'll be right someday. I don't think the end is necessarily. Look at September 11th. Look at the financial tsunami of 2008 that hit us. Look at the tech implosion around 2000. We've recovered from all of those, okay? So markets eventually go up. God forbid, you don't even want me to scare you with what I really know and talk to buddies in Washington about, like bio and chemical attacks that most likely are going to be next. If you can infect 8 dudes with Ebola and fly them into Miami, Chicago, Dallas, San Fran, Seattle, LA, and let them walk around for a couple days, if you become a member and you join me at Lake Tahoe, I'll curl your toes with what the Pentagon and what the government thinks is most likely going to happen. So here we go. John, was there you saying the only? No, that's not the only reason we put on a disaster put. I was saying one of the reasons. We put on a disaster put to reduce margin. We also put on a disaster put, John, as I was saying, as a canary in the coal mine, as a warning light to go, hey, this Jan 19 position, it's getting kicked in the gut right now. Do I believe by Jan 19 it's going to come back, or should I get out now? So, John, there's a couple reasons for a disaster put. The reason I bring up a disaster put, let me get back on track here, is because I'm not going to go out to October right now and buy disaster puts on the S&P 500. A 20% down move in the S&P means Guam was vaporized and 80,000 Americans are dead and Seoul, South Korea is a parking lot. Your portfolio will be the last thing on anyone's mind, especially yours. So if we get a 20% down move in the market, it's because of a horrific geopolitical event, period. Okay? The only other way that happens, guys, is some sort of flash crash which could happen. North Korea, China, anybody does, if you don't think that, I keep paper receipts of my bank stuff, folks. If you don't think that you're not going to wake up one day and your bank account's going to be at zero, imagine the terror that's going to instill if Americans all woke up one day and there was nothing in their bank accounts. So I know, Harry, it'll be great to be at Lake Tahoe. We're gonna have a good time. So, and Tamara's right. I didn't even bring up the I word, folks. Iran. There's a little country in the Arabian Gulf. I don't call it the Persian Gulf because they call it the Persian Gulf. We'll call it the Arabian Gulf. There's a little country called Iran who's watching every move that happens with North Korea. Thanks to Barack Obama, who flew unmarked airplanes. Listen to this, folks. Barack Obama flew unmarked airplanes full of euros, pallets of cash. They weren't dollars, US dollars, because that would have been illegal. Pallets of euros to the Iranian mullahs. $150 billion. Mind you, I know for a fact that the Iranian special forces have killed nearly 1,000 US soldiers. You ever hear that in the media, folks? Do you not think Iranian forces have been in Iraq the entire time fighting us? Some of these incredibly detailed or sophisticated IEDs, Barack Obama and the Pentagon was ordered. I know I had a buddy who got fired because he tried to tell the media about this. Iranians have been killing US soldiers for the past, call it 12 years, guys. Insane that this dude flew pallets of cash there. The reason I'm getting on this rant, guys, is because whatever happens in North Korea, the guy's not giving up his nukes, by the way. This guy has seen Saddam Hussein at the end of a noose break his neck. He's seen Muammar Gaddafi at the end of I'm not going to tell you how do you know how Muammar Gaddafi died? Google that video and don't watch it with your kids around. He's seen how Muammar Gaddafi died. The dude is not going to give up his nukes. So what do you think? How do you think this ends, guys? I want to know. You guys type in the chat box real quick and let me know. How do you think, I forgot I got a hedge fund meeting at 6. How do you guys think North Korea ends? Do you think, first of all, you got kind of two semi-unstable people. Do you think it ends with them giving up their nukes? That's not going to happen. Do you think it ends with Trump backing down? That's not going to happen. Bolt in his head, I hope. Surgical strike. Lucas most likely has it right. John, he's going to take as much of the world with him. Folks, the guy is nuts. Okay, he knows. He's seen other dictators around the world and how they've ended when they mess with the United States. It's usually not pretty. Okay, so over drinks during the Super Bowl. But here we go, guys. It's either going to be a surgical strike with a couple SEAL teams, like a Bin Laden type of Bin Laden type of thing. We got to get to the trading, guys. I'm going way far behind, and I need to head to a hedge fund networking event that just popped up on my calendar that I completely forgot about. Here's what we need to do. We need. It's a huge, super long discussion that I don't have time for. When you become a member, we'll spend all the time in the world on this. Because one of the most common questions is, how much should I hedge? How much should I hedge my portfolio? The answer is, I have a nice rant, Wiz, I always enjoy. You're welcome. How much should I hedge, Wiz? The answer is, first of all, I don't know. I can't give you investment advice. I'm going to talk about me, right? You can't fully, let me say it this way. Obviously, there's the term hedge funds, right? A hedge fund, folks, technically should be hedged. They shouldn't be seeing 50% returns, 10% losses. It should be a nice, stable, why? Because they're hedged. Think of it this way. I can't fully hedge my kids, right? I can't wrap them in bubble wrap, stick them in the room and say, don't ever come out. I don't want any harm to happen to you. They can't live. There's nothing there. So you have to ask yourself, how much protection am I willing to pay for to hedge my portfolio? That's the big question. And we're going to talk about two types of hedges. If you watch the replays from the past couple free webinars with the trades that I gave out, I came up with a term called a tredge, which was what? A trade and a hedge. Why are you calling it a trade, dude? I want to make money on a trade, period. And here at Top Gun Options, our average profitable trade is 74% of the time. Nearly 3 out of 4 times the trades we put out make money. It's incredible. Most professional traders shoot for around 60. So that's called a trade. I want to make money. A hedge, listen very closely, I don't care if I don't make money. Notice I didn't say lose. Most of you are going to say, hey, Wiz, those puts I bought lost money. Don't think of it that way. If you think of it that way, you're an awful retail trader. Okay? Yeah, this was a saying we had in our fighter squadron. You never lose when you're buying for your buddies. Okay? The same thing can be said of a hedge. I don't sit in this place and write a check every month to USAA for my auto, home, and life and say, oh my God, I'm losing money on this insurance. If you do that, you have problems. Not only do I not write a check every month, it's on auto debit. And some idiot backed into me in Boca, long story. I'm like, thank God I have insurance. So today we're not going to talk about the trudge because these trudges were awesome. These 2 trudges, like I said, if you traded them, if you did a good dogfight with these, you made potentially over $10,000 on 2 trades with limited risk. These were trudges. Watch these to get an idea of what a trudge is. Today, I'm doing something completely that I usually don't do. We're going to hedge. Why do I not usually do this? It's the tactic that I'm telling you to do. Usually I do spreads or things like that. Well, with this, first of all, one of the hedges is going to be on the VIX. You can't, you can, but if you do a spread on a VIX, you're using futures, guys, and it's long. I have zero time to explain this. You're trading futures on the VIX 30 days out, right? You're not trading the spot VIX. You're actually not trading spot volatility. So the spreads should be showing like, hey, man, this should be making money, and you're like losing money. Do not trade spreads on the VIX, guys. Longer discussion, become a member, and we'll talk about this. We have a volatility arbitrage trader. His name's Doug Robertson. He'll teach you till your eyes glaze over. Okay, so let's do this. Write down this wisdom as well. When volatility is cheap, you buy it. When vol is expensive, what do? You sell it. So look at the VIX, guys. It's a heart rate monitor. Holy crap, the president's going to be impeached. Jim Comey. No, he's not. Whatever that one was. Oh my God, nuclear war with North Korea. No, we're not. Oh my God, all the CEOs are leaving. Gary Cohn's going to resign. No, he's not. Volatility, folks, always reverts to its mean. Lately, the resting heart rate, guys, like I told you, I worked out earlier. I like to work out every day. I can run at a 10 incline on the treadmill at 10 miles an hour. Wow, that's impressive. No, it isn't, folks. I can do that for about 30 seconds, and then I need to get back to my resting heart rate. Picture volatility. Grab a balloon, folks, and write volatility on it. When uncertainty creeps into the market, blow up that balloon. When certainty happens, whenever the uncertainty goes away, let go of the damn balloon, man, and look at this volatility smash. Folks, I think that's the Comey memo right here or whatever. Here's a Yogi Berra-ism. When something is known, wait for it, it's known. What do I mean by that? I told you we made $22,000 in our model portfolio around the Brexit. We traded a bullish double vertical for 11 grand going in. Uncertainty went up. And before the outcome was known, I closed that trade and put on a bearish double vertical out a week after the vote was going to be known. And what happened to volatility, guys? It imploded. I hate this term, but I'm actually going to use it. It's like shooting fish in a barrel. What other known event? The election. I told you that. Knew the election was coming. Volatility was going to go up. And then even instead of doing a bearish double vertical a week out, I went 2 weeks out because I'm like, maybe the market will still be, maybe volatility will still be elevated if Trump wins. What happened, guys? 2-3 days after the election, the VIX smashed. The dude's from Wall Street. Say what you will about him now, but at the time, I knew that when, not if Trump won, the market was going to wake up and go, it ain't that bad, man. The guy is literally, he lives in New York. He's a real estate developer. He's pro-business. Let's stop being limousine liberals and get on with trading. That's exactly what happened, folks. This is how you have to trade volatility. Now, let's take a look at some VIX options out to October, okay? Why October? I just spent 45 minutes telling you why October. If you're late, watch the replay. When's the VIX expired? The third Wednesday afternoon of every month, whenever the hell it is. Look at the VIX today, 8% pop. You know, we had been trading around 10 on the VIX. Now we're up here at around 12. Ladies and gentlemen, oh my God, Wiz, that's expensive. No, it's not. You ready for this, folks? The average mean of the VIX since it was founded, 92, 93, is a 20. Let me say that again. The average VIX for the past X amount of years, 27 years, whatever it's been, 17, whatever, 20. We're at 12. We're in potential nuclear war. We're talking about government shutdowns. The former CIA chief Clapper is on CNN talking about the 25th Amendment and removing Trump for mental reasons. We're at 12. So look at the volume and the open interest on double VIX. These people, massive volume. Look at the 25 strike. I talked about this Tuesday morning in my primary live trade brief. Look at the 25 strike, folks. 630,000 calls. Now, let me give you a quick options 101. I pretty much for a fact know that that's bullish activity, but guys, these could be sold as well. Now, I'm playing Stump the Trump, right? Yeah, Stump the Trump is right. Stump the Chump. Remember, folks, looking at just this screen, you cannot tell if those are bought or sold. You become a member, I'll teach you where to look and all that stuff. But suffice it to say, I know for a fact, most of this, 98% of these are what? They're bought at the ask, which means gimme, 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 buy, buy, buy. Look at the volume, look at the open interest in double the VIX right now. So trade number one that I want to talk about is what? Get long. I talked about this Tuesday morning in our primary live trade brief. I would look at buying VIX 25 October calls. How many of them? I can't tell you. I think in our primary live trade brief, I was personally looking at about 50 for the model portfolios, okay? You have to take a look at your risk and all that stuff. And if you are using real capital, folks, let me pay my attorneys. You have got to talk to an IRA, a registered investment advisor, or pick up the phone and call your broker dealer. Thinkorswim, Options House. Those folks can give you personal investment advice. I can't. I'm telling you what the hell I would be doing, folks. And it's funny because some people are like, oh, Wiz, that's a crowded trade. When it comes to volatility, who cares? It's a crowded trade, folks, because don't get me wrong, man. I don't want nuclear war with North Korea. I don't want a government shutdown. I want all my Jan 19 and 18 long call diagonals to keep on printing money. I don't want to pull back. But we have got to be prepared and hedge. So if October comes, and historically, folks, October is what? The most volatile month in the stock market anyway. So guess what? The odds are in our favor that something is most likely going to happen in October. Remember, I'm not going to bring the chart up again, but every 4 or 5 weeks, it's like clockwork, guys. Something happens to freak this market the hell out. And there's a lot of smart people. That is a lot of institutional money right there going, we got a lot of longs. We're kind of cautiously bullish like Wiz, but we're also going to hedge. First trade, VIX, October, 25 calls, buy them. Buy them hand over fist, guys, and they're still relatively cheap. They're going up in price, guys. That's why you need to get in now, right? If wait any longer with the, if things still going south, the vol is going to start going through the roof, okay? So, Christopher, why not go to November? And there's a lot of other good questions, but Chris, I'll try and take these at the end here, guys, because I need to get moving because I want to talk about SPX. Harry, mid-market. Chris, you don't want to, you want to be, you can't go too far out, Chris. November, shit, man, we might all be dead in November. That's way too far out as far as volatility. I got to be honest with you, October's kind of far out there, but it's the next known big event on the market's radar. And the reason the market went down today for the 5th time is what? The president's speech last night when he said, give me a wall or I'm shutting down the government. What did Wall Street do? Holy crap. Guys, I'm not pulling up VXX today. Why? Why am I not pulling up VXX today? Somebody tell me. I don't know. Actually, I do know. They're doing what? They're rebalancing. Exactly, guys. It's the reverse 4-for-1 split. That's why I'm talking about VIX. I still wouldn't be doing VXX right now until this thing settles out, right? So look at this. This is all gooned up. So good question, but that's why I'm not doing it. All right. Second trade, SPX. I do not trade SPY. And let me say this right now. I'm not a tax attorney. I'm not your accountant. I don't play one on TV. I will tell you that there is potentially better tax treatment between trading SPX and trading SPY. I will leave it at that. You can do your own research. Done. I trade, let's just say I trade SPX for a reason, and you guys can figure it out on your own. Look at all these expirations, guys. We got Wednesdays, Mondays. I would go out to the middle of October and hedge. Let me get rid of this one. Now, I am not going to use the term disaster put. Disaster put for me is reserved for a frigging disaster. Disney, Facebook, Apple, any of my Jan 19s go down 20%. That would suck. That's a disaster. If this market goes down 5%, folks, it's a disaster because going through 5%, if you buy 5% down puts, down at 20, you know, now we're printing money. Oops, hold on one second. Speaking of hedge fund. Okay. So I would be looking at puts on the S&P 500 that are 20% below where we are right now. Let's just say 25, 25, 50 minus, let's take a look at the chart rate for technical levels too. Remember, folks, the market likes round numbers. What do I mean by that? The market doesn't like 2102.7, you know, and 70 cents. They like either 2,000, 3,000, 4,000, 2,500. So you know, I would go about, well, let's take a look at the prices. And again, let's see. I would say, let's take a look at the, yeah, I actually have to open all of my strikes, or maybe 40 of them. I think 40 will do it, right? What's the exact math on that? Somebody do that. Yeah, exactly, Harry. 13, what is that? 20% down. Roy, yeah, 1950 is a 20% drop, guys. So I'm thinking I like the. I'm kind of using some Kentucky windage here. I like the. I don't like for a hedge 2,000, but maybe 22. I'm trying to find a nice tight. This is, in case you're wondering, guys, this moving average. I thought about this earlier. Is 2,300. I think in the PLTB we talked about what, guys? The 2,400 puts. Somebody remind me. Yeah. It was about somewhere one, and it's crazy that I'm talking like this. Somewhere in my training, I remember one of my instructors saying, you know, somewhere between the 200-day moving average and the 50-day moving average would be a good hedge. That's why I'm being drawn to this 2,400 level. You know, if you're going pure support level, all my doji, reverse Fibonacci, all that crap, we used to burn witches too, guys. None of that stuff, it's comical how people believe in that stuff. If you mentioned anything technical analysis wise in peak 6, they'd throw you out the window. So couple places to potentially hedge. The 200-day moving average. If we get a government shutdown, I don't think, remember what happened under John Boehner, folks. I hated gridlock coming in end. I hate the fact that we have Republicans running the House, the Senate, and have the White House. I loved gridlock. I loved John Boehner's suntan, cigarette smoking, quivering lip. Remember that government shut? It was like clockwork. We would do bullish and bearish double verticals going into those government shutdowns. We would do bullish and bearish double verticals going into the Fed meetings. Remember Ben Bernanke? Oh, is he going to taper? Is he not going to taper? We printed money going in and out of those Fed meetings. And so that's why I'm not going to go as deep. If we're hitting the 200-day moving average, guys, it's over with. Guam is gone, or I mean, just something horrific happened. I'd split the difference. This is what we talked about yesterday in the primary live trade brief. I would do it, John, you could do that. Absolutely. Steve, not about believing, it's about knowing what others with billions to invest in believe. I don't necessarily agree with that, Steve, either. But Steve, why don't you come to Lake Tahoe and we'll talk about everything over a drink. Every time I talk to technical analysts, what can they predict what the right side of a chart looks like? How many brokers allow you to trade off the left side of the chart there, Steve? No, and Tamara, you're exactly right. A lot of those they try and make it a lot more confusing than it needs to be. There is not one technical analyst that did anything that we predicted this year and that had these hedges on. Not one. So right here with this Comey memo, we had a VXX bullish double vertical that made $6,000. I'd love to find the guy who could show me on a chart that Jim Comey was going to do that. We had a trade on for that. Not a Jim Comey specific trade. I had a hedge on that. I said something bad's going to happen here in the next couple of weeks, guys. Market technician equals a weatherman. You got it, Doug. I couldn't agree more. Yeah, Juan, I'm saying 2,400 because that is about a 2 to 2.5% drop. So if you're super worried, go lower to the 200-day moving average, and it'll be a hell of a lot cheaper. Obviously, guys, if you're going to go down to the holy crap 200-day moving average, these puts are going to be very, very, very cheap. Let's take a look at them. Okay. Oh, please, can you see the right side? Let us know. Steve, no, I can't. But you know what, Steve, you ever hear of something called the at-the-money straddle? I love talking to chartists. I'll ask them, hey, what's the right side of a chart look like? Steve, I never said I know what the right side of a chart looks like. I said I'd ask a technician. But Steve, there's something called the at-the-money straddle. If we took a look at the at-the-money straddle, the options price, the options market, which is a pretty smart group of folks there, Steve, can, with a 60 to 65% probability, the at-the-money straddle will show us the range that the market most likely will be trading in by a certain date. You show me a technician that can do that, done, Steve. I'll buy you a beer. If you don't know what the at-the-money straddle is, Steve, you most likely should to join up here. Then you have no more info than the chartist. Steve, all right, I'm done with Steve, guys. Let's ignore Steve. But yeah, guys, exactly, folks. I did it today in Accelerated Retirement. The at-the-money straddle, folks, tells you what the options market is pricing in a move between this strike and this strike by this date. There's not one chartist that will predict that, guys. So that's it. John, I'm sorry. It's just these people like to, or at least Steve's trying to play stump the chump, but he's not going to sign up anyway, so it's a waste to talk to him. So, folks, let's talk about buying puts at the 200-day moving average. This is one of the rare times in my careers, like buying straight calls. The rare times in my options career I've been a straight call buyer have been stupid. The old water cooler, hey, did you hear X, Y, and Z might happen, or Twitter might get bought out by Disney? Oh, okay, yeah, let me buy some calls. Loss. I know John and Pete Najarian very well, good dudes. They do a semi-decent average or good job of following unusual options flow. But folks, I rarely am a straight call or put buyer. This is one of probably the second or third time in my entire career where I'm just going to be a straight buyer of puts. I'm not going to put on a bear put spread. It's just going to be some disaster puts down here at the 2400 level or right around here at around 2350, okay? And again, sign up. We can talk about, you know, how much protection is enough. You have to personally take a look at that. I have a $100,000 portfolio. How much insurance am I willing to pay out in order for potential return? But don't over hedge. Yes, I'll answer your questions here in a couple minutes. I only wanted to go an hour, especially since I have to run to downtown Fort Lauderdale. Thank God for calendar reminders. I did not remember that I had a damn hedge fund meeting today. Jesus. But let me try and answer some of these good questions. Well, you know, here's the first thing I'm going to do. For the folks that are asking how much to hedge and I want to become a member, here's what I'm going to do for you today, guys. Here's where you need to go if you want to come on at Top Gun Options. Okay, here we go. Here's the link. It's go.topgunoptions.com/FT. That stands for Full Throttle. That's our most popular industry-leading program, FT-now. Go.topgunoptions.com/FT, Full Throttle, -now. And let me put it in the chat box as well. I'll leave the page up here, and then I'll try and answer as many questions as I can before I got to go jump into my monkey suit and go network. Here's the 3 tracks that we have here at Top Gun Options. There's defensive. Hey, Wiz, I'm a little bit more conservative, want to hedge, I want to grow some capital, but I don't want to stick my fangs out of my oxygen mask and dogfight the market. That's called the defensive track. Then we have the offensive track, which includes getting after the market with our weekly option service. So we trade weekly options here every Monday, 1 o'clock. It's only about a half an hour. It's a quick tactical live trade brief every Monday at 1 o'clock. Weekly options has been doing great, 89% win rate year to date. We took a break for the past, or we took a break, was it last week or this? With the big swings, that's when you push back from the table with weekly options. It ain't worth it, folks. Sometimes the best trade is no trade. The defensive track, instead of trading weekly options, which are very tactical, potentially very profitable, but they can leave a mark if they suck, you have access to what I did today at 1 o'clock, which is called accelerated retirement, okay? Now, obviously, we have a package for the people who, this is our most popular, 85% of our members are in this package. It's called Max Afterburner, okay? Obviously, an annual subscription is a hell of a lot more cheaper than doing it month to month, but we do have month-to-month subscriptions available. Usually, folks that sign up for the month-to-month memberships, no kidding, on average, like, was it 2.3 months in, we get an email to support that says, all right, upgrade me to an annual, I believe. It's kind of like the Polar Express. So yes, there's the annual fees, right, is right here. It's $19.95 for defensive or $195 a month. It's $245 for the offensive, and then the max slot is $295. But obviously, folks, and after the past couple free Thursday sessions, I've seen people upgrading their monthly. So people who have just found out about TGO, like I said, we built 2,000. A lot of people have done a great. Steve, you're awesome, man. Steve, Truth in Advertising, everything is on this page, my friend. Don't know why you're so bitter. Don't you have somewhere else to troll? I think it's actually Lloyd Blankfein. I think Steve is Lloyd Blankfein, folks. But let me leave this page up here for the folks that are actually interested in getting on board Top Gun Options, and let me scroll back through the questions right here. If you asked a really good question earlier, please repost it. Steve is our winner today, Harry. Make sure you repost it because I want to answer your questions. Boo the fixed income department, Steve. That's awesome. Oh, I love you too, Steve. Steve, it's also more difficult to make money weekly with low volatility. Steve, it depends on what you're trading. You trade in Amazon, a Facebook, and Apple. We've been trading those. The really good question, we're beating the percent. I can calculate that, Steve. I don't have it handy. Before the big North Korea dip and rebound and dip, we're up about 12%. We were up. I don't know what it is for 8 now. That is a good question, Steve. We are outperforming the S&P easily year to date. Christine, that's a long one. I don't know if I can read that. Okay, good. Yes. Absolutely. If you want to grab your membership by phone, folks, it's right here. I don't know why you need to, but shoot us an email, support@topgunoptions.com, or give us a call. Whoever just said, hey, can I call and place my membership? Yeah, 754-300-1084, and you can give that number a call right now. Yep, let me. Yes, Rebecca, those are in the blue boxes are the annual fees, membership fees. Obviously, it's cheaper to do an annual membership. That's what most people do. But if this is your first webinar and who the hell's this guy with too much Red Bull and coffee, do a month to month and then upgrade. Harry, you will make plenty of money if you join Steve, listen and learn. Thank you, Harry. Steve, can you provide detailed trades for the year? Trust but verify. Absolutely, Steve. We have Excel sheets. We have where's my desktop? TGO, Options House. Whoops. Type. Yes, Steve. We everything is in the Options House. Portfolios, AR, accelerated retirement year to date. Everything's all, yeah. Alex, these are through June 30th, folks. Up nearly 50 grand just in AR. So yes, everything, Steve. Your wish is my command, Steve, to make you happy. But guys, like I said, I only wanted to go an hour today because I do need to get to this networking event. Thank God for calendar reminders. So folks, yes, I'll put the link up one more time. It's go.topgunoptions.com/getft. Right here. Where is a good, there you go, the max afterburner slide. Yeah, if you have any questions, folks, go to or shoot me an email and support. I am all about answering questions and all that stuff. You're welcome, Steve. It's FT-now. Sorry, guys. You would think I would know my own link, man. But let me get out of here in short order because I need to new tab. It is go.getft. Right, FT-now. Jesus. There it is, guys. Yeah. The number's on this page. Whoever asked for the number, yep, it's at the bottom of the page. I'm not going to scroll down. I can leave this page up, but like I said, I got to go jump in my monkey suit, man, which I rarely wear, especially down here in Florida. It's hot as hell, and I'm going to sweat my ass off. So, folks, get long volatility out to October and get some disaster puts on. I rarely do those type of trades. My job is to scare the hell out of you. Why? Because I want you to hedge. Okay, you can't. Here's another wisdom before I go. You can't make money if you're losing money. I know that's blindingly stupid, but there's a lot of intelligence in that. Meaning, for all these great trades that you have, if they're all going to get wiped out, when that wipeout could have been prevented by a little bit of forethought, that's my job. I never took off on a combat mission over Iraq going, we are number one, we're Superman. You sit there in the brief and you go, how am I going to get killed? What threats are out there that are going to reach out and touch me? And guess what, folks? Sometimes there are trades that I get blown out of that you shake your head and go, there's no way I could have known that was going to happen. Here's a great example I use all the time. Google. The day, everybody remember like a year and a half, 2 years ago when it renamed itself after market close to Alphabet? I had a weekly iron condor on that got blown out and I lost 5 grand in the blink of an eye. You know how I reacted? I laughed. Holy crap. It's not like I can find $5 grand in my couch. That's not why I laughed. I laughed because that's the exception to the rule. If you get blown out like by one of those every once in a while, you got to, I mean, come on, man. That's like me planning for 6 hours to fly a mission over Syria, and I know every air-to-air missiles, I got everything. I have full situation awareness. And all of a sudden, here comes a mobile launcher that nobody saw. Satellite, CIA, nobody. Then you gotta manage. Okay. Thankfully here at TGO, those things are a hell of a lot less often than not. Okay. All right, guys, I'm going to leave this page up. I'm going to go get changed. My phone's buzzing, which means a couple people are grabbing slots. Welcome aboard. If we don't get you this time, maybe I'll do another free webinar here in a couple weeks to talk more about this. But I'm kind of getting out of the free webinar here business because we're doing a full throttle launch in middle of September. So we're not gonna be doing too many more of these. We do these 4 times a week, guys. 4 live trade briefs a week. None of this marketing crap. It's all it's all trading. It's all strategic operational briefs, and it's all talking about the positions in the model portfolios. Okay. All right, guys. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and welcome aboard to all of our new members.